Good to be here.
First of all, I want to start with some, I guess current events and, obviously the last few days in crypto, the kind of the talk of the town has been the Luna Foundation guard, and the UST peg breaking down. Can for listeners, maybe anybody who, hasn't heard about this, or maybe anyone who just doesn't really understand the dynamics of everything that's happened over the last call it 72 hours. You kind of walk us through, what happened and what caused that meltdown, and as well as like how does the Terra protocol work?
Yeah, so the Terra ecosystem is basically based around algorithmic stablecoins, and those are very different from collateralized stablecoins. And so for collateralized stablecoins like Tether or USDC, they hold a certain amount of assets that can be redeemed, for those tokens. Basically, you're at least supposedly backed one to one by assets. Whereas in an algorithmic stablecoin, they use software to try to make a token worth a dollar, even though it's not actually backed up by any dollars, right? It's just kind of this artificial mechanism to try to maintain it at the value of a dollar. And as one might expect, those have been fraught with failure. You're kind of the mechanism is you're trying to be like an emerging market central bank, except without capital controls and without an economy to tax. It's kind of like this based on this first in, first out, and a really shaky set of kind of economic principles that can only last so long. And so the way that that worked is, if their stablecoin was below the peg, it was below a dollar, you could basically arbitrage that in order to get that back up using their other token, which is Luna. And so basically what it does is it pushes the volatility over to Luna. And as long as their stablecoin demand is increasing, it also increases the value of Luna over time generally. But the problem is that the demand for that was artificial. It was based on artificially high yields from various VC incentives and things like that. Basically, it wasn't a sustainable organic demand. It was kind of this, you can call it a Ponzi scheme. That's not really far off. Basically, it's this kind of front-loaded, unsustainable type of thing to draw capital in. And you know those are vulnerable to attack. Even without an attack, basically UST surplus yields were going to dry up, and so basically we saw a run on the bank. Basically people started to see that it was failing, and they all wanted out at the same time. And so Luna's equity was brought down to basically zero. You lose 99% plus of the value, it goes to zero, and the peg breaks. And so this was something like, if you combine Luna and their stable coins, it was nearly a $60 billion protocol, and that was wiped out in a matter of days. And a challenge is that they I think they saw the writing on the wall. They were worried about the possibility of a death spiral, so they started buying other assets ahead of time, kind of like an emerging market holding treasuries or gold as a reserve currency that they can sell if they want to support their currency. And so they bought Bitcoin, and then they had to sell that into the market, or specifically they were loading it to market makers to do various ways to try to defend the peg. And so they had to sell Bitcoin into a weak market. And now there's contagion because multiple funds had exposure to it. This was kind of like a Lehman Brothers moment for the crypto space. And if we zoom out for a while, so there are a number of people warning about this. I warned about it in the month ahead. And if we zoom out of why this happens over time, right? If you look at business cycles, right? So, and I've shared this with you before, that the PMI cycle, so Purchasing Managers Index, uh, you know, that's kind of a gauge of is economic growth accelerating, or is it beginning to slow down? And it's not whether it's growing or shrinking, it's whether it's accelerating or decelerating. Although if the number gets low enough, it becomes outright shrinking. And what you generally see is that during accelerating periods, that's when liquidity is flowing. It's easy to get credit. Often the Federal Reserve is pumping money into the market. You have these economic booms in the United States and many other parts of the world, and anyone with like a narrative can sell these tokens, these unregistered securities, and offshore regulatory gray zones, right? They can just pull in capital, and when you have those declining PMI environments, liquidity being withdrawn, it's like the tide going out, and anyone who's swimming naked gets exposed, or at least a lot of them. And we generally see these boom bust cycles. And so that's essentially what we're seeing now, is that after a big giant rise up in PMIs and economic growth and liquidity, we're now getting a pullback in all those things. And so all these things that were kind of based on first in, first out, Ponzi-nomics, the vast majority of that is just getting cleared away. And unfortunately, that's a very large percentage of the crypto space.
Yeah, for sure. Do you think this attack was nefarious in the sense of, someone purposely tried to take down the peg, or do you think it was something where it's just low hanging fruit and someone was going to do it if someone else can step in and do it? There's been a this conspiracy theory circulating about Citadel and BlackRock, and they both come out and denied that they had any involvement. But do you think this was, perhaps an entity or group of large entities in the crypto space that saw an opportunity? Or do you think this was just, it just happened because of kind of the backdrop of weak price action, weak macro environment, everything you just described, and it was just kind of inevitably going to happen at some point?
So I think if something can be attacked, it will be attacked, right? If you can make money from attacking it, it will be. And that's the problem with algorithmic stablecoins. Essentially, their whole defense playbook is public. So, if there's a military and you know exactly how they're going to respond, you would know exactly how to attack. And, attacking this peg in a bull market would be a lot harder, right? Because confidence in it would be high. Whereas attacking it in this kind of, low liquidity, tide going out environment, that's basically when they have openings that you can do an attack. And so evidence does suggest there was a well capitalized intentional attack. I don't know for sure who did it, obviously. But I think in the long run this was inevitable. I think if this didn't happen now, so for example, when I was warning about this potentially happening, I didn't expect it was going to happen, in mid-May, right? That wasn't, it was actually earlier than I would have guessed, because you can't predict when an attack like that's going to happen. It was more like, if you're predicting a forest fire, you can't say when lightning is going to strike a tree and start a forest fire, but you can warn when there's conditions that would make a forest fire likely or risky to happen. And that's essentially the state they were in. Basically, it was a very risky situation. Over the long run, if there was no specific attack, I think what would have happened is that demand for UST, their stable coin, would have dried up as the yields dried up in Anchor, and eventually, I think you would have gotten a slower bank run until it turned out into a crisis like this. So instead, we kind of ripped the bandit off, got it out ahead of time. And so, I think it was inevitable one way or another.
Yeah, no, I agree with you. And kind of going off of that, obviously, like they've had to sell off all of their Bitcoin reserves, and it's been wild. I posted the chart yesterday of like, it just shows like their wallet holdings, and it's wild. It's just like, stairs up, elevator straight down. But aside from just like the shorter term price impact of on BTC, which I think it's caused like some short term drawdown in price, but BTC can absorb this, right? It's the most liquid asset in this crypto ecosystem. But what I think is yet to be seen is some of like the contagion from this event. I mean, obviously, you described like this is a multi-billion dollar, or was a multi-billion dollar protocol, and there's probably numerous funds and projects alike that have heavy exposure to both Luna and UST. So how do you think through that, and do you think we'll see more second order, third order effects coming out of this that will emerge in the crypto space over the coming days or weeks?
I think so. I think basically we saw the kill shot, and now the industry's got to bleed out a lot of the malinvestment, and that already happened pretty quickly. But I think, if you look through bear markets, generally you start to see Bitcoin dominance rise, especially say Bitcoin X stablecoin dominance. So put the collateralized stablecoins aside, Bitcoin compared to all the other cryptos. I think basically we had over $1 trillion of malinvestment in the space, and that's basically going to get sorted out, or at least a lot of it's going to get sorted out in the coming days, weeks, and months. Um, and basically it's natural that now everything's being tested, right? So something blew up, everything's being tested. They're testing the tether peg, they're testing this, they're testing that. We're going to see which funds didn't make it through. And when there's kind of industry-wide liquidity being withdrawn, Bitcoin can hold up among the best because it's liquid and because it's not having any sort of technical issues like many of these other things are. But even that gets pulled down in price because if you're outside capital, if you're not in the crypto space and you're thinking about investing in Bitcoin, this is not the moment where a lot of outside funds are going to be like, you know what, we should buy Bitcoin. Now maybe there'll be really forward-thinking ones that say, hey, look, it's all on sale. We've been waiting to get in. This is the time. But basically, the kind of the normie finance is sitting there just kind of watching this play out, and everybody's kind of risking off. And so I think it has to just, there's more contagion likely to happen. Although, we might have seen the bottom in Bitcoin. I have no idea. My base case is that Bitcoin will go on to make new all-time highs eventually, and I think a lot of crypto projects won't. I think they have one or two cycles in them, and then they played out their story, and then it's on to whatever the next narrative is.